Hello friends, welcome to today's Bitcoin technical analysis. The bias for today based on current technical factors is neutral, which means Bitcoin's price is likely to move within a range. Okay, so looking at my chart, at first glance, it looks a bit complicated to you probably, but don't worry, I will break it down step by step and show you how I came to my conclusion. So let's start with an overview. First of all, I want to show you that there's a bullish Elliott wave structure, 1, 2, 3, 4, 5, which is seeing a correction in terms of a wave A. And also, we have an indicator here showing a mixed view. Okay, I'll just dive deeper. Okay, so you can see on this chart that I have dissected the Elliott wave from the chart you just saw. So this is just a 1, 2, 3, 4, 5 bullish Elliott impulsive wave, and currently the market is experiencing a corrective move in the form of wave A. So this correction within a larger trend gives me a mixed picture. And also on the first screen that you see that the indicators here, this is the stochastics and this is the MACD. So the stochastics is showing a bullish signal while the MACD is still in negative zone. So it also portrays a mixed picture. So when we combine the two technical factors, the corrective Elliott wave A and the mixed indicators, we have ourselves a neutral bias. Okay, so now that we have formed a directional bias, it's going sideways. So which levels are going to be relevant to ultimately see an uptrend or a downtrend? So these two levels I have identified at resistance at 17,230 and 16,770. Okay, we will go and see why these two levels are important, and at the same time we will explore what is likely to happen if price breaks above and below. So in a bullish scenario, when price breaks above, by the way, what you're seeing here are live prices. So this is the current market. So the first thing I would like to see in a bullish scenario is that the 17,050 level is taken by the bears, because this level has served as a resistance and a support and then a resistance here. So this tells us there's quite a bit of interest around this area. So if the bulls want to proceed to the 17,230 area, which is where we will confirm a bullish move, they have to first take out this 17,050 level. Okay, once they take out the 17,050, 17,230 will be the next challenge, and once we surpass, it is likely that the bulls will be able to move higher to 17,500. Okay, let's take a look why we chose the 17,230 and 17,500 as key levels. So for both of them, if I were to drag it back, you can see that the 17,230 is served as a previous resistance, and for the 17,500 it also served as a previous tested resistance. So that is why if price can first challenge 17,050 and break above 17,230, we'll see an confirmed uptrend to 17,500. What on the flip side, in a bearish scenario, if the market breaks below 16,770, what is likely going to happen is that it's going to drop to 16,480. And again, I'd like to show you why are these levels important. Remember that previously I showed you this chart where we have the Elliott wave structure. So wave A tends to retrace about 61.8% of the entire move here. So if I were to draw a Fibonacci retracement, you can see that The 16770, it's actually the 38.2% retracement, and the 16480 is the target at the 61.8 retracement. So that is why these two levels are key if the market is in a bearish scenario. So first they would have to take out the 16770, and then once that is broken, I will actually give an update and show you what is the likely scenario. So if you want to receive updates, please remember to subscribe to my channel. Okay, I will actually do another update video once the levels 16770 and 17230 are taken out. Okay, so that's it for today. Yeah, this is the overview of the technical analysis. So if you have any questions on today's analysis, please use the comments section below to reach me. And if you like my style of technical analysis, please give me a high five by hitting the like button. Yep, and thank you, and I'll see you tomorrow.